Microsoft is one of the most dominant tech companies in the world, but is its stock a buyer today? In this video, I'll analyze Microsoft from an investing perspective. We will briefly look at Microsoft businesses, its financials, future outlook, and calculate its intrinsic value. Quick overview. Microsoft is a global tech giant behind Windows, the most used PC operating system, and Office tools like Word, Excel, and PowerPoint. Its cloud platform Azure is a major competitor to AWS and Google Cloud. Microsoft also owns LinkedIn, GitHub, Skype, Bing, and Xbox, spanning business software, coding, search, and gaming. But for a full breakdown of everything Microsoft owns and does, check out my separate video, What Does Microsoft Do? It's linked below. Financials. EPS is around $13.50, PE ratio is about 34, paying a quarterly dividend around $3.3 with a yield of 0.7%. Minimal short interest, 1-year returns around 5%, 5-year returns around 150%, and 10 years returns a whopping 860%. Microsoft's revenue per share has been growing for a decade straight. Same goes for the EPS, except little bumps here and there. Last few years revenue has been growing between 7 and 17%, mainly on the latter side. EPS growth has been between 0 and 40%. Returns on equity and invested capital hover around 30%, which is really good. Margins have been increasing compared to 10 years ago and hover around 35%. Good balance sheet and minimal debt. Future. Microsoft's biggest growth opportunities are in cloud computing and artificial intelligence. Azure, its cloud platform, is still gaining market share and driving strong revenue growth. AI is another major focus. Microsoft has a deep partnership with OpenAI and it's integrating AI features across products like Office, Bing, and Windows, aiming to make them more powerful and sticky for users. But there are some challenges. In cloud, Microsoft faces tough competition from Amazon, AWS, and Google Cloud. In AI, while the potential is huge, it's still early. The tech is evolving fast and it's not yet clear how well it can be monetized. Regulation is another risk. With growing antitrust scrutiny in both US and Europe, especially as Microsoft expands its influence across cloud, AI, and software markets. Intrinsic value. Now let's estimate a fair buying price for Microsoft stock. The current earnings per share is $13.39, and analysts expect solid growth in the years ahead, generally in the mid-double digits. While I'll agree Microsoft will likely grow in the double digits, I will take a more conservative approach. I'm assuming 11% annual growth for the next 5 years and 6% per year after that. Microsoft has historically traded at a high PE ratio due to its strong fundamentals. The 10-year median is around 31. To stay cautious, I'll assume a future PE of 28. With these assumptions, the estimated intrinsic value comes out to be around $400 per share. And here's a look at different price points and their corresponding expected returns. Compared to the current market price, Microsoft appears to be around 10% overvalued. And as always, this is just an estimate, not investing advice. So make sure to do your own research before making any decisions. Microsoft is a high-quality company with a strong moat and solid long-term growth potential. But at today's price, investors should ask whether the upside justifies the current valuation. To be clear, the risk here isn't about Microsoft's possible business failings. It's about the stock being potentially priced too high, which could limit future returns even if the company continues to perform well. I do own the stock, but with these prices I will just stick to holding it, not buying it. Let me know in the comments, do you think Microsoft is a buy today? And don't forget to check out my video, What does Microsoft do? If you want a full breakdown of their businesses. Thanks for watching, and as always, do not lose money and safe travels. Bye bye.